welcome to the Money Tip Podcast, presented by Fully Funded Life. My name is Joe Sengel. We are here to help you each and every Monday with a right now relevant tip, and we are episode number
320.
And that is the voice of Megan Hibbard, my co-host for each and every podcast. We are here today talking about, we're going to debunk something.
Debunk. We're debunking investing myths.
Have you ever thought about that word, debunking?
It's such an interesting word.
Like, what is a bunk? Like, when I think of a bunk, I think of bunk beds.
I think of bunk beds, too.
So if we're going to debunk, we're going to, like, knock something out of its bed. We're going to debunk it.
Or I think of, like, a bunker.
Oh, a bunker? We're going to get them out of a bunker, a military bunker?
I don't know.
Yeah, we're going to debunk it. We're going to remove it out of the bunker. We're debunkers.
We're bonkers.
We're bonkers for debunking.
For debunking.
So we're going to debunk some investing myths. So let's list some myths, and then we're going to debunk them.
All right. So number one, the stock market is like a casino.
The stock market is like a casino. Ding, 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 ding. You know, they can say that, but listen, the average annualized return since adopting 500 stocks into the index, the S&P 500, 500 companies, stocks are in that. They're publicly traded. They did that in 1957 for the first time. Did you know that?
I did not know that.
Well, it's kind of crazy. Through December 31st, 2023. Okay, so from 1957 to what, 66 years later?
Sure.
Is 10.26%.
Doesn't seem like a casino to me.
Doesn't seem like a casino to me because I can tell you right now, if you've flown to Vegas, have you been to Vegas?
No, I have not. Should I go? Is it worth it?
You need to go. You need to go. It's pretty amazing. But let me tell you, they built that place with money that people gambled and they lost. Now, people also spent money on shows and things like that, but a lot of money is ching-a-ling-a-ling and through those slot machines and table games and all the different stuff happening there. And you know what? I would say the stock market is not like a casino.
Yeah.
The casino has bright lights. It's got attractions. It's got the lure and the temptation of maybe to the greed side of you. Come in here and just gamble 25 cents and you'll get 25 million. Press the button, win the Ferrari. If you never watch Vegas Vacation, you should. Stock market is not like that. But people say that when they treat it as such. We recently did an episode on day trading. And there are people who have treated it as such. And in the short term, your investment may go down. But Warren Buffett says when he buys a stock, he pretends that the stock market's going to be closed for the next 10 years. He never looks at the stock price on that daily basis because he's buying for long term.
Yeah.
So that's an investing myth. It is not like a casino.
I'd be curious to get like stats on like casinos and gambling to see how many people go in and lose money versus how many go in and like hit it big. You know what I mean?
Yeah.
I don't know.
Name the number of people that have come to us saying, Joe, I need coaching because of my winnings from going to Vegas.
Still waiting.
There we go. Let's go for another investing myth that needs kicked out of its bunk. It needs debunked.
Number 2, I can time the market. You can time it wrong.
Yeah, you can time it wrong. People ought to say they can time the market. You know, a historical perspective of the market, well, this is from an article that I found that I like, says the historical perspective of the market shows us a pattern of bull and bear markets that may be tempting to investors. Why not try to time it and avoid those short-lived bear markets? Wouldn't that be more lucrative? Unfortunately, it's not that easy. Timing the market is impossible. This is what the writer says, and could be a costly mistake. In fact, avoiding the market's downs may mean missing out on the ups as well. 78% of the stock market's best days occurred during a bear market or during the first 2 months of a bull market. If you missed the market's 10 best days over the past 30 years, your returns would be cut in half. And if you missed out on the best 30 days, it reduced your returns by an astonishing 83%. Isn't that crazy? We got some charts we'd like to show on the screen here. This is from Hartford Funds. And they're really just saying, hey, you need to be, they're really pushing what we like to push. Hey, be invested for the long term. We teach the 5-year rule. If your money is invested, you should not have a need for that money for the next 5 years. If so, it has no business being put at risk.
Right.
You can set your other number of years if you like, 2 years, 3 years. I've chosen 5 years based on data. You can go find my podcast episodes and different teaching on that. But listen, this is why I stay invested. When the market collapses, I run in like Macy's is having a 50% off sale. I'm in. So what's another myth?
All right, another myth, number 3. It's too late for me to invest. Too late.
No, you're supposed to say it this way. It's too late for me to invest.
Well, then you should have put in parentheses, old lady voice.
Would you do good? What's that? Here's the old man voice. You ready? It's too late for me to invest, sonny boy.
That's pretty good.
Was it pretty good?
Yeah.
I can't wait till I have that voice. I aspire to be an old man someday.
I could make jokes at you, but I'm not going to because I like my job.
A lot of people say, "Hey, listen, I don't think I've ever anger fired anybody for making fun of me." So that'd be fun to do. No, it's too late for me to invest in the old lady voice or old man voice. Do you want to try the old lady voice? Do you want to try a voice?
Oh, you wrote no.
I want you to try it.
Our producer trying to be funny. He wrote it in there.
Yeah. Do you want to try it? Try it. Try it. 3, 2. That was not very good.
Okay, I'll do it just
Try
for you. Oh, I can't do it. Okay. It's too late for me to invest.
That's actually really good.
Why do I feel the need to always have a cane?
I don't know. You need a cane.
An invisible cane.
So, listen, Wealth Management Group Senior Vice President Nicole Webb
Thank you, Nicole.
says you manage money, you invest money to mortality till you die. It's just never too late. That was when she made a Fox Business Network's appearance on Making Money with Charles Payne. I've got a link to the article.
Thank you, Charles.
The fact is, it's never too late for you to invest. As Nicole said, listen, all the way to mortality, to death. In fact, it's interesting. My father is 86 by the recording of this podcast, Lord willing. It's 86. What if he had said at 60, it's too late for me to invest? What if he had said at 70, it's too late for him to invest?
Yeah.
I can say within the last week, he has invested. And he's had me do it because he gets frustrated with these online brokers. He doesn't know where to click, doesn't know how to turn the power button on. Yeah. So he calls me and says, "Can you do this?" And so I do that because, it's not too late. And I'm confident he's putting in money he doesn't need tomorrow or the next 5 years. And he wants to be a wise steward of those dollars. And so he's putting it at some level of risk with value investments.
Good.
It's never too late for you to invest. And I think one of the things that I say I aspire to be an old man someday is I like this idea, and I see people do this as they age, is their perspective shifts beyond their natural life. And their perspective shifts to how do they maximize dollars for their children's children. It's almost biblical, as Proverbs 13:22 says, dishonest money dwindles away. But whoever gathers money little by little makes it grow. Yeah. That's Proverbs 13:11. But then it says a good person leaves an inheritance for their children's children, but a sinner's wealth is stored for the righteous. I just quoted Proverbs 13:11 and Proverbs 13:22. So it really is all about perspective. You manage money and make money decisions, and you can invest even if you're a listener and you already have your old lady or old man voice. It's not too late. Start. What's crazy though, Megan, is I will talk with 40-year-olds and they think it's too late. And you're like,
there's a lot of life left.
What? I mean, there's a lot left. So you need to put it to work. And listen, suppose you're right. Suppose it is too late. Suppose you die 5 days from now. Well, you'll go on to your eternal reward and it won't matter anyway.
Sure.
But suppose you live 15 or 20 more years. You'll be looked back saying, I'm so glad I did that. So get with it. So I think we've successfully dumped the bunk. We've debunked some myths. What do you think?
Yeah.
I'm thinking about them picking up the mattress and tipping soldiers out, young privates. Get up, get up.
Tipping them over.
Tip them
out of
over.
the bunk.
Was that good?
Great.
Any thoughts you'd like to add to that?
I mean, I think a lot of I think even people, it's the opposite. Even people younger than me would say, I have plenty of time. I don't need to invest.
Oh, that's
like
another
it's the
myth.
opposite, you know? And it's like, woo.
You are not too young to start. Get started now. Time, value, money will be your friend. Hey, thanks so much for joining us for the Monday Money Tip podcasts. We debunk some financial myths today. Next week, we're going to talk about the ultimate guide to Roth IRA contribution limits. And that's really important in what we're talking about. It's not too late to start investing. We'll help you more with it next week. In the meantime, this week, go out, think about what are the myths you're believing to be true that are actually lies. Debunk them, and you'll be on your way to living a fully funded life more swiftly. Have a great week, everybody. Hey, thanks for watching this video. There's a lot more content on our website. We got a few of them linked right here, and we got a subscription link as well. We would be so honored if you would click that like and subscribe button and go learn some additional stuff so that you can live your fully funded life.